Good morning. All right, so yesterday's little mini crash is over, and we'll see where we go from here. But after a drop like that, I think it's easily assumed, very easily assumed, let's see if it follows through, that prices are going to go lower. Um, Maybe not today. Usually, after a day like yesterday, we get a stabilization day. And so, one of the things I wanted to review here this morning was the fact that the confirmation of yesterday's breath suggests that, or confirms a bias that it's going to go lower. So if you remember back here, when the markets turned from this low, this sell-off here, I had mentioned the fact that breath went from the extreme down here all the way back up into this bearish area was actually historically bullish. The fact that it could move from this level to that level in such a short period of time is confirmation, and it's not to suggest that because this moved to a bearish level, it's going to back off from there. It's just the opposite when it happens this way. And so now the move off of the high point here down confirms the same, where it went from a bearish level down to a bullish level is actually not bullish. It's confirmation of yesterday's move to the downside. And so now you see also that the sentiment is still up in, let's just say, the stratosphere up there. That sentiment got to such a bearish extreme, coming up above the static level and above the bands, where we say the wrong way option traders are betting on a guaranteed blast off to the upside. And then maybe it could have happened, you never know, but it didn't. Rather, we got this bearish island reversal here where we had the gap up a couple of 3 days or so. This is where we talked about the head and shoulders top when we looked at the hourly charts a few days ago. And yesterday, everybody knows what happened. So prices on the S&Ps, the spiders here stopped at the 200. And you see it's lined up there with this little congestion area. And so now, where do we go from here? Well, we'll look at the futures. Things are, I guess, stabilized here for the moment. And I think just based on here, we'll see what this does over the next day or so. But this unfilled gap, I would think, is an easily target to expect prices to come down to in the 50 MA down here, maybe sometime next week. But we'll see how far prices get today. This is a bad tick over here. So 307, not a big deal. All right. So you see the Dow up here, 570 some odd points. And just like, someone in the room mentioned a percentage move in whatever stock it was. And I mentioned, well, it's really not a big deal because where it had moved preceding it, that percentage move in context of what preceded it is just a normal move. So looking at percentage moves isn't necessarily a good guideline. Tick extremes, we could do that, in the room rather than here pre-market. Could get into a lengthy discussion talking about how to use the tick. So I don't want to do it right here. Dan's got to cover gaps and such, but we can do it in the chat room, maybe at lunchtime. So again, 307, where is it in relation to yesterday? Really not a big deal. And, you got this big gap down. And, when it gapped down into this area and began to hold, I think this was the area over here, I forget, where it seemed possible we could get a reversal going back up. And that didn't happen. And you remember in the room, again, I can't remember whether it was right here, but on the S&Ps, if you remember, I bought the ES and I was like waiting, like I said, this isn't working. It was just jiggling around too much. And then I doubled up to short on the Dow, and that kind of saved the trade, so to speak. The ES was obviously hit the stops I actually got out before the stop, but the Dow, that continued to tumble. Anyway, so we'll see how today shapes up. Right now it's just hanging up there, and we'll easier look at the futures. Let's just see where they're at. So you can see right at the bottom of the range, and we take away the gap because that was trading overnight. And so, what we always do is we always look at like that halfway point as a guide. And if it's truly bearish, it'll never even get up to the halfway point. But that is the line in the sand where we want to see prices stay below when we see a wide range bar. We want to see it stay in the lower half and ideally in the lower third, kind of where it is. So the way it came down, there's nothing to stop it from going up at this point. And that is, the problem in a sense is like, look, you get a wide range bar and you get this kind of momentum move that has bearish implications. And so now there's nothing to stop it from going higher. There's no significant resistance areas over here. So what has to happen is that it creates resistance. And that is what the essence of a 1, 2, 3 continuation is about, or sometimes you get an extra day, is that while it's consolidating down here, intraday, it's building a resistance area, meaning it comes up and it forms a pivot and then it retests, and that takes a little bit of time. So we may be in for a choppy day here. We shall see how it shapes up, but it's not uncommon that after a wide range bar like that, you get a choppy consolidation day near the bottom of the bar. Right. And yesterday's McGraw, you talking to Dan there or somebody else? I don't want to miss any questions. Everybody in SPX day. So that's a 1 minute. Can't really, not a good guide to where prices may not go. Again, I would say if there's any juice, if we take the halfway mark, and should definitely not get up to 3,100, but we always want to see what happens in the first few minutes as far as any attempts to move higher or lower. That gives us an intraday reference point for SPX 0 days to expiration trades to be able to do and get away from wherever prices currently are to suggest that they can't go there. So as I move this down to eyeballing the halfway mark, I noticed it came down, and I didn't do it on purpose, but it came down on top of that topping tail. So let's just get rid of this. Doesn't mean anything anymore. This area right here, I would say would be the resistance area or stopping point somewhere in here. So a call spread up above this area theoretically should be where prices won't go today. So above 30.70, so whatever spread you want up above there, but we'll see, get a little bit of a better idea as it starts to trade. Let me just go back to the ES here. $3,100. See, there's just nothing here. There's nothing here. So I want to be up here if there's any premium, but I'll see how this shapes up, in the first 30 minutes or so, whether we get some kind of a break. So looking at the 5 minute here and the 15 minute, you can see as it's retesting, these pivots are being created. Especially at the open, which this instrument loves to do that in a situation like this, is to push up and immediately fail. So some type of a failure pattern within the first 10, 15 minutes where it comes back in would give us a good reference point to say, okay, that is going to be or should be a good high point at least to start with. Right now, we just don't have one because while it's going sideways here, it could easily poke above here. Notice how it poked down and it came right back up again. So there are buyers on dips here. So from the call spread side, we want to see something like this happen up here, right? And then come back in again. So on the put side, I mean, with a big down day like this, I think somewhere down below here should be safe for a put spread. We'll assess that. Qs, you can see similar story, giant, big red bar, stopped at the 20 MA, so still showing relative strength. 200 is well down here. And that's an easy way of determining relative strength and weakness, whether it's an index or a stock. Just look at a moving average. Pick any moving average and just compare where prices are in relation to that to whatever you want to compare it to. You don't need any special charts. So this is still in an uptrend. That's a nasty red bar. You can see the biggest one in this whole advance. So it needs to be respected. But now we can see, okay, number 2 day, consolidation day. So far, it's still in the bottom part there. And it's chopping around. So does this become an M top? We'll do all the analysis that we typically do. And we'll see how that shapes up. Qs. I'm getting bad ticks here today. 238. No, right? No big deal. In other words, when I say no big deal, it's not retracing that far to say, should we start to put into question the power of yesterday's move and the implications of lower prices? And today's open doesn't do that at all. Today's open is actually quite normal after a drop like that. Russell, it's the same story there.
But Greg, if you don't look at that overnight, data, just look at a daily IWM, it's gapping to yesterday's high. That's a very bullish gap.
Well, would because it's not incorporating the
I know
down.
That's my point. But it looks like if IWM closed here, it's a 180 reversal
after a giant gap down. So you
correct. But you're saying the gaps are normal, and I'm saying IWM is not. That's a big old gap.
Trade it the way you want, Dan. I'm saying that this gap down needs to be respected.
I've said it.
I don't care that it's gapping up here, right? If I look at the futures and I look at the size of this gap down, right? Let's see what it does here. It doesn't mean that this isn't bearish. If you want to trade it on the long side for a day trade, that's completely different than saying that this gap up has bullish implications. Same story here. It's coming up, and here's, you can see the continuous drop. And at what point your seller is going to come in and say, right, this drop, I just better get out of the way because this is going to go lower. So at what point do traders, institutions feel, well, that's enough of this move up that, I survived and maybe can cut some of my losses from yesterday. So we'll see by watching the pattern. Bonds are down here today, right? Normal, just looking at the chart, they pushed up into minor resistance and reversing back down again. Normal price action. Everything's normal here today after what occurred yesterday. Oil stalled into the gap fill, and transports giant gap down and deep into where it held. So we have everything here confirming a bearish day. Typically, you get a stabilization day historically, and then we'll just see what happens from there. So, all yours.
All right, good morning. Yeah, we talked, on MT Live just 2 days ago, this exact subject. Well, talked about many things. We talked about WRBs, but the point I was going to make was we defined end of day decline. So we had a huge down day. We talked about this bearish pre-market, and this is an end of day decline. We mentioned, support over here. So to get a gap up from this end of day decline, climactic buy setup far from the 20 was not unexpected at all. I'd have to say I'm surprised of the size of the gap. Our gap rules, like we say, we don't want them to retrace more than 50%. So that's it. We'll just do our factory work every day. We do not have, we only have 2 open positions as a swing trades. We had a beautiful short here on Pfizer, gap breakdown, easy trade management. We're in 2/3 of a position. And I had tightened the stop yesterday over this pivot right here to try to go for a home run on the 3rd lot. So I just changed it to 5-minute high. We'll take our money. Humana we shorted and we covered a 1/3 into the close. That looks fine. We put on a bunch of bear call credit spreads. Let's run through those. Boeing gapping up. I moved stop to 5-minute high. We have 2 sets of call spreads, one that expires today and one that expires next week. Actually, I changed the stop to 5-minute high, but let me make a note to our subscribers. The one that expires today to let it expire worthless. Second. All right. Because I had to move stop on both of them, so I was unclear. All right, Facebook, M top, we sold a call spread over the highs, gapping against us, but nothing to do. So when I look at this trade management, our choices are do nothing, add, reduce, or adjust. One of my favorite adjustings is legging into a condor. But with this gap up today, do I want to leg into a condor? No, heck no. Maybe I would if it takes out yesterday's high, but right now, just eyeballing 50% gap, no. So there's no adjustment. There's nothing to do. Thanks, Craig. Mark and Alex. Let's see, Google, we have a call spread that expires today, the 1460s. So even with this big gap up, we should be totally fine. Even with the gap up, just the overnight time decay, we should be fine. Home Depot, we did one for next week. Same, gapping up, but there's no adjustments necessary. J&J, same, did a call spread over the high. MA, same, taking out the pre-market high, but I'm just eyeballing it. It's 50% retracement into this bar, but it's a nasty bar, nasty gap, nasty weekly. There's no changes. So yeah, I actually got an email from somebody this morning all concerned. Oh, I can't wait till I see how you're going to handle these gaps. And that's what I'm doing right now in real time. I'm not concerned about, they're gapping against us, but you hear my analysis, nothing to do. MKC, I see one print up here. And if it doesn't have volume, I discount it. So that's it. Those are all our opens. Let's see, some folks on YouTube asking about Starbucks, Lyft, Uber. Starbucks got shellacked yesterday. Any of these gappers, you know, you're going to hear me say that I don't even think about going long as a swing. But if we get a bullish intraday setup with a price void, then they're fine. You know, counter trends, day trades. But that damage in weekly is damaged on Starbucks. Uber, same. Gap into resistance. I like this one a little better, the 15-minute chart, just the way it's acting pre-market. Lyft, same. I guess I like Uber better of the three of those. Let's just continue here. Zoom was strong. You know, look at this is at an uptrend. Daily, weekly, monthly. This one's rallying to this breakdown, but if it can go sideways for an hour, then it might go. Tom, can you explain? Yeah, because Boeing, I had moved the stop yesterday to over this pivot right here. So I moved the stop 182.57, but it's gapping over it, right? So now this is a reverse head and shoulders. And our gap rules, folks, as a reminder, we have so many valuable documents in our resources in your members area. And you have no idea how many emails I send every day to people, you know, I'm saying, look, it's answered in the first video, it's answered in the third one, it's answered in the ninth one, you know. So we have a document in there about gaps, and that's our rule. It, you know, gaps over your stop, then you can either use 5 or 30 minute. Since we are locking in a profit, there's no reason to wait 30 minutes, in my opinion. I mean, we sold this for $1.50. It closed at 24 cents. So even with the stop out, it's going to be a gain. It's just a matter of how much. And then the one that we're short for next week, the 230s, way the heck up here, 230s. It's trading at 186. That's $46 away, $44 away. We have one that expires today, the 220s. And that's the one I just said, let it expire worthless. F-cell gapping up, but no pattern. Zoom, we just reviewed. This looks like a penny stock toy of some sort. Huge gap up, look at that. $2 to 8. KBS 480, bullish gap. That looks like a toy. You can see all these tails. It just gets slapped down. Visa is close to the stop. Well, if it is, then we'll take it. That's, you know, we'll take it if it hits. You know, then it's a red bar ignored. Because that one we gave a tighter short strike than over. But I surely didn't expect this nasty red bar to get negated in one day. It's not negated yet. Let's see the stop on Visa. And, you know, you subscribers, in members area, in your contents, there's the open and close spreadsheet. But this is what we did yesterday. This was the original call. So we got, well, no, it is higher. So we got the 200 strike. So even though I gave a 200 strike, I gave the stop over the high because then the trade ain't doing what I thought it would do. I've noticed jets and cruise liners are having bullish gaps today. I actually sold, I told you, some 1650 puts yesterday that expired today, so they're going to be worthless. And I didn't even care. I was willing to take the stock. So now they're going to be worthless. So I'm now going to look to sell some puts on jets for next week. Same thing, 1650, stop yesterday's low. So let's look at airlines and cruise ships. No great pattern, but same thing, same idea. Maybe some put spreads under yesterday's low. If they hold, I'm doing nothing at the open here. And CCL. As of now, they could be day trades. UAL, Delta, Love. They're all still a mess. So I'm not interested in swinging them, just put spreads if they set up. And that's why I like Jets. You know, you don't pick on one, do the whole ETF. Earnings, SEAC, but nothing. Party. Party, I think had earnings. This is a party store. I think they were talking about bankruptcy. It's up big, but no pattern. Hoft, no pattern. Baidu is ripping. Now this is extended intraday. Nothing to do with that. Wooba, nothing. PVH, can't tell where it's gapping. I think it had earnings. Lulu was on our short watch list. Small little M top, but it had earnings today, gap down. Let's keep an eye on this. This could be a call spread candidate, depending on what it does. Zeke, what's the gap up of the market? I have no idea what that means, Zeke. Adobe had earnings, bullish gap, 409. Look at this, is gapping not only over the red bar, but to all-time highs. Let's keep an eye on this as a put spread and or maybe a day trade long. That's holding very well pre-market. The markets are just grinding higher here, so that's a continued little bullish bias at the open until we get like a look at Apple. Apple reverse head and shoulders with a price void, left shoulder head, gap to resistance, breaking out, price void. That could be a long scalp if the market wants to rally for the first 30 minutes. Play and earnings, maybe a put spread. We'll keep an eye on that in 30 minutes. Correct, Mark. Yeah, if Visa stops out, I'll just take it. I mean, you got to ask yourself, okay, we have a different set of facts. If you wanted to give a 30-minute high instead of 5, I could see it. And whenever you give a 5 or 30-minute high or low, you got a risk. It can either hold it, or it can make your loss bigger. So you got to look at the pattern, and it depends on your bias. But if something is bullish and it all of a sudden looks like a long, I surely don't want to be. No, I'm bearish next week too. I am. I am. So, but you know, if this takes out yesterday's high and then goes to fill the gap before it turns, if this fills the gap, then I have no interest in it anymore. None. Things that when the market, if it were to turn, you know, bearish, I will be looking for more bearish patterns that showed relative weakness, right? Things that did not retrace as much. Here, look at Lulu upper right. Let's keep an eye on that for a call spread. Like I said, you know, if we can get the 320s for today.